CEO and co-founder of Real Vision Group, Raoul Pal. What a pleasure to have you on the show. I believe it's your first appearance on a pan-Arab TV station, so thank you very much for joining Sky News Arabia today. Raoul, let me start by asking you how and why on earth you think that Bitcoin will hit $1 million up from like 15K now?
Yeah, let me explain it in terms that I think the viewers will understand. Being in the Middle East, everybody understands gold. It's part of the culture. And what is it about gold that people love? It's the fact that there's only a certain amount of supply of gold. You only mine a certain amount, so it has a value, and it's had a value over thousands of years. Bitcoin has an even more limited supply. So there's almost no supply written in the algorithm, but the demand is becoming enormous because all of the pension funds and investment banks and hedge funds and high net worth individuals are realizing that Bitcoin, like gold, is a store of wealth. And this phase is just accelerating. So for me, I think it goes rapidly over it goes in big cycles. And it'll probably hit something like $200,000 on this cycle. And then by about 2025, 2026, we should be hitting something like $1 million. It's been using this trend since the beginning. It's something quite extraordinary.
But that's in the course of few years, Raoul?
Well, it's been the best performing asset class in all history already. It's the best performing asset class in the last 5 years, the best performing asset class in the last year. And I think it's going to remain the best performing asset class because it hasn't yet got to true price discovery.
Raoul, you say, I quote, the narrative is way behind the reality when it comes to Bitcoin. Can you elaborate more?
Yes. So the narrative in Bitcoin, if you pick up a newspaper, it's like Bitcoin is a digital currency for drug dealers. Bitcoin's going to get banned by governments. All of these things, all of the negatives, almost none of this is true. So if you look at the IMF or the Bank of International Settlements or the ECB or the BOJ or the Bank of England or the Fed, they all write papers about it. And they want to build digital currencies that integrate with the Bitcoin system. They don't want to get rid of it. It's like the gold has a value, but this is like digital gold. So I think a lot of these narratives are very far behind. Even yesterday, Stan Druckenmiller, probably the greatest investor alive today, was on television saying that he owns Bitcoin. And that's an extraordinary thing because that's giving a green light to anybody to own Bitcoin in the asset management world. And it won't be long before you see all of the family offices, people in the Middle East getting involved in it. We're seeing people in Silicon Valley, the large pools of capital around the world. They want to protect their savings. And Bitcoin is a perfect vehicle for it.
I see. But tell me, why would people trust cryptocurrencies versus digital currencies? We know that every central bank now around the globe is working so hard on launching its own digital currency.
The question is here, what is a digital currency versus what is a cryptocurrency? A digital currency is just a digital version of the existing currency, so they can print more of it. So it doesn't protect you from anything. It's a way to transfer money. So I can send you money instantaneously to Abu Dhabi from the Cayman Islands where I am. Right now, that's a pain to do. I have to go to my bank. I have to have a KYC letter. Why am I sending the money? That all goes. It becomes instantaneous settlement mechanism. The central banks can use it for more stuff, and we'll come on to that in a bit. Bitcoin is based around a formula, a cryptographic formula that restricts the amount of supply. So nobody can devalue your currency. Now that's an amazing thing, where nobody can change the value of that currency because it's distributed amongst millions of people.
Okay, let me argue this. Digital currencies will be at least controlled by the government. So in principles, it is backed by fundamentals, by the economy, the fundamentals of the economy, and by policies put by governments. Isn't it so?
Well, it depends, right? So if you're in Turkey right now, your currency is going down every day. So what you want, and why is that? It's because of the behavior of how the Turkish central bank or the government has dealt with their economy. And so the currency goes down in price. With cryptocurrency, particularly Bitcoin, Nobody can interfere in it. So it's just based, like gold, on supply and demand. There is nothing else. So it can't be the economic fundamentals. It can't be, did the finance minister do something wrong? Did they put up interest rates? It doesn't matter to Bitcoin. It's like gold. It just exists. So it's very perfect. The digital currencies are just digital versions of the existing currencies. So the dirham will be just a digital dirham. So they're very different things.
So changing gears here, I think we're all very happy with Pfizer news, a coronavirus vaccine that is 90% effective. How can that change the way we plan a portfolio?
Well, two things. Firstly, when you actually look at the numbers, 94 people actually were kind of part of that test, because the larger group didn't get the virus at all. There was a group that was placebo, so that actually the numbers are incredibly small. So this 90% number is not real. So there are more tests, there's more things we need to find out, but regardless, there will be a vaccine, whether it's this one or not. Question is how long before it gets rolled out? Now, if you think about what's happening in the Middle East, the virus is going up. In the US, it's exploding higher. In Europe, it's exploding higher. So we have to go from now to, let's say, March before they even start to roll out a vaccine. So we have to deal with a bad economic situation for 6 months or 5 months, something like that. There's no stimulus going on right now. So the central banks are going to start printing more money. They're going to start stimulating, which drives up Bitcoin and gold again, as we talked about before. But also just the economy, I think, is in a very fragile point. The market's now hoping, please let this be the vaccine, but maybe it's not. And the reality is, for most people around the world, I mean, how are you going to vaccinate everybody in India? This takes years, 2 years. So this is not going away as fast as people hope it is. And the markets are reacting to hope. It is a good positive sign, but we always knew it was coming. But let's see when it actually comes.
Raoul, back to the impact of coronavirus. We've seen stimulus that never seen in history, more than $14 trillion. In principles, it should be enough to jumpstart any economy and the whole economy of the world. However, some argue that it's not enough. So do you think we need a new round of stimulus? If that's the case, how and why?
Well, the question is firstly, does stimulus work? And this is the problem. When I give you a direct check from the government, it works. If I print money, then it needs to go to the banks and then to you. But if the banks don't want to lend you money, then you're unlucky. The stimulus doesn't work. So that's what we refer to as velocity of money. The money that goes into the system, does it move around? So when you look at velocity of money, and I just did it, I wrote a piece on it over the weekend. When you look at velocity of money, the US is still above 1. So if you inject money into the system, it does get around just, but it's the lowest in all recorded history. Europe, less than 1. Switzerland, less than 1. Australia, Japan, nowhere does the money mechanism work. And that's because the banks are in a mess. And this is a solvency issue that's going on right now, because all of these businesses have fixed costs, but all their incomes come down because of the pandemic. This is a really big problem. So yes, we do need more stimulus. This is why Jay Powell and others, and the ECB, Christine Lagarde, keep saying we need fiscal stimulus, not monetary stimulus, because monetary stimulus doesn't work. Interest rates are at 0. Will the Fed go negative? Probably, because the Bank of England are about to the ECB, our Sweden is, New Zealand's been, everybody's been. But really, they need to do fiscal stimulus. And that, when you're changing a government in the US, makes it impossible. In Europe, they've just done a big round. Everybody's too in debt. So it's really hard to pass another one. So it's a difficult situation. So
speaking of monetary stimulus, do you think that we have an asset bubble now? I give you two options. Are we up for another run, or we are set for a serious correction?
Well, the issue is here, the picture's not as simple as it used to be. So if you say that, and you look at the bank shares have gone nowhere since March, really. They came up a little bit and then they've been sideways. So stimulus is not going into the banks. It's not going into whole sectors of the economy, but it went into the NASDAQ and the tech stocks. Why is that? Well, because these things have something called a SaaS business model, software as a service. And what they have is they have no debt and generate huge amounts of cash with 70, 80% margins. So investors think, well, these are pretty safe. They look like bonds. So people have done that. Now, these are now crazy valuations. Companies like Zoom, or even, Facebook, or any of these, they're crazy valuations. So who's buying those? So that's interesting. Yes, there's some hedge funds and others, but what it really is driving the flow of money is the millennials, the younger kids in their 401ks, their pension plans. So they're starting to save, and those buy index funds. And so anything that's in an index fund keeps doing this. Anything that's not keeps doing that, because these ones, the active portfolios, are owned by the baby boom generation who are age 65 and above, and they're selling because they want to retire. So that's creating this huge bifurcation in the market. So yes, I do think it corrects. I do think we can't have these valuations. I think there is too much hope in the market, but it's also a very unusual market as well. So it makes it very difficult to decide.
Okay, then Raoul, tell me then why you're bullish on dollar. What's the dollar outlook?
Because everybody uses the dollar. So if you think of the Middle East, the dollar is the currency that all of your trade is in. Everything, even in your investment portfolio, is in dollars. And that's the same for Brazil, South Africa, Australia, South Korea, China, India. Dollar is 80% of all world trade. So you need dollars. So when the oil price goes down, Saudi Arabia needs more dollars, because that is the income that they get and their costs that a dollar costs. So this is the problem. There is not enough dollars in the world. The US accounts for 25% of the global economy, and 80% of the world trade is in dollars. They don't generate enough dollars. And when the European and the Japanese banking system are in not a good shape, then those dollars go into the banks and don't come out to the other side. So this is why, even with central banks printing, because of velocity of money, because of the banks, the people who need the dollars can't get them. And we've seen the big move in the Turkish lira. We've seen the move in the Brazilian real. We've seen the move in the South African rand. They're all based on this same dollar shortage. So it's a complicated situation. So I don't think the dollar goes down yet. I think it probably goes higher as opposed to lower for the next 2 years.
Percentage?
I still think it's got another 20% upside. I think I call it the dollar wrecking ball, because that is very painful for the world economy. And then the IMF and everybody else have acknowledged that they can't deal with this system and it has to change. And the IMF talked about a new Bretton Woods, something to try and change this dynamic. So if you think of the dynamic, if the US dollar is 80% of world trade, it really should come closer to the 25% that the US is of the economy. So let's call it 40%. So if they can construct an agreement on currencies where the US dollar, where let's say Saudi Arabia sells oil in a basket of currencies and not in dollars, where the dollar is a low weight, well, that helps everybody. It helps South Africa, it helps Brazil, it helps the buyers and it's the sellers of commodities. So this kind of thing, I think, is what has to happen. There has to be a wholesale change.
Okay. Well, then tell me why you're bullish in gold then. And give me a number. Like, are we talking about 2,000, 2,4, 2,6, 2,8, 5, 5K?
So my view is that gold over the next 5 years, because I don't think this stimulus is going to change. I think we're going to see ongoing stimulus like we saw after the last recession and the recession before that. It goes on for a long time. I think gold goes potentially to 10,000 over the next 5 years. But that's not unusual versus other gold bull markets. When gold moves, it moves a lot. So if you look at the bull market in the 1970s, it rallied, it corrected, And the next rally was about the same size as the initial rally. So we've had the same thing after the 99 low. It rallied, it corrected over the last few years, and we're starting again. If that's right, then it gives you a target of something like 10,000. So even if you assume I'm an idiot, maybe it goes to 5,000. It's still pretty good.
Well, Raoul, 5,000 is a lot, but tell me why.
Because the value of hard assets versus paper currency. So if you think about the world where everybody's printing more currency, the Federal Reserve, the Bank of England, the ECB, the Bank of Japan, the Swiss National Bank, the Australian National Bank, and they're all creating more currency. So if they're all doing it at the same time, then the currencies don't move against each other much. But what it does do is gold. So if you think about gold, gold has had a value for 1,000 years. So, you could have bought a suit in 2,000 years ago, and it's roughly the same price as a suit is now in gold terms. That's why there's the big gold souks in the Middle East and in India, because everybody understands this. It's a way of keeping hold of your money. And so if the value of the central bank money is going down because there's more of it, if you think about in terms of oil, once you pump too much oil, the price of oil goes down. It's the same with money. It's identical. So once you pump too much money, you find that the price of gold rises in dollar terms. Maybe it's just staying the same, but the price of currency is falling.
Well, but Raoul, that was not the case back in 2008. QE in the US, Europe, Bank of Japan, Bank of England, etc., etc. And gold hardly hit 1920 back in 2011. Why it's different now?
Because interest rates are at zero. So you're starting the whole cycle with Europe at negative interest rates, the US at zero, the UK at zero, Japan at negative. So you have no monetary mechanism left except printing of money. And so you have to do more and more of it. And as we explained, because of the velocity of money, it's a very blunt tool. It doesn't work very well anymore. So that's why there's an excess amount. Now, also in 2008, firstly, the dollar went down for a bit and gold and the dollar inverse. So gold kind of moved around. It didn't really work as a crash protection, which it doesn't do. But and then the dollar went up for a period of time, and that's not very good for gold normally. But that dynamic's changed, and we've seen over the last few years both gold and the dollar rising, which is interesting. It means the dollar is the least bad currency, but gold is the best of all.
Raoul, one last question. What to buy and what to sell, apart, of course, from gold, Bitcoin, and dollar?
I think that if we're looking at a longer-term time horizon that I look at, then one of the biggest opportunities in the world is going to be India. Because you have a huge young population with small debts, very dynamic, technologies being implemented. Ambani's made this huge, ambitious move. Fascinating story. I'm also, and have been for a long time, very bullish on the Middle East overall, because of the young population, dynamic changing economies, Saudi's changing its structure of its economy. These are all good things, whether it's as far across as Morocco. I think all of these countries with the young populations, usually many of them are Islamic populations around the Indian Ocean, plus India, maybe down to Singapore, even as far across as Indonesia. I think these are really exciting places to invest. And if people are based in the Middle East, they understand it better, because all of these cultures have traded with each other for thousands of years. And people live in each of the countries. So I really like that. I don't think the US stock market is the place to put money. So if you have a lot of money in the US stock market, which I think a lot of Middle Eastern investors do, I think it's time to be a little more cautious and maybe look closer to home. What are the opportunities closer to home? I think that's something interesting to me.
Thanks a lot, Raoul. What an interesting discussion. Thank you very much for joining Sky News Arabia today.